You worked 30, 40 years, paid into Social Security your whole career. So when that first check finally hits your account, it feels like it should be yours. Tax-free. Earned. Here's the uncomfortable truth: for millions of retirees, a chunk of that check goes right back to the IRS. Today I'm breaking down exactly when Social Security is taxed, how much, and the one number that decides it, using the actual 2026 rules. Let's kill a common myth first. Social Security is not automatically tax-free, and it's also not automatically taxed like a paycheck. It depends on something called your combined income, sometimes called provisional income. Here's the formula the IRS actually uses: combined income equals your adjusted gross income, plus any tax-exempt interest, plus 50% of your Social Security benefits. That's it. 3 numbers, added together. That result decides everything. Once you have your combined income number, here's where you land in 2026. If you're a single filer, under $25,000, none of your Social Security is taxed. Between $25,000 and $34,000, up to 50% of your benefits can be taxed. Above $34,000, up to 85% of your benefits can be taxed. If you're married filing jointly, under $32,000, no tax. Between $32,000 and $44,000, up to 50% taxable. Above $44,000, up to 85% taxable. Now here's the part that surprises almost everyone: those numbers have not changed since 1993. Not a single dollar of inflation adjustment in over 30 years. Meanwhile, everything else, your paycheck, your cost of living, your Social Security benefit itself, keeps rising every year with inflation. That means more retirees get pulled into taxation every single year, even though Congress never voted to raise anyone's taxes. The thresholds just stayed still while the world moved. Now, 85% taxable doesn't mean you lose 85% of your check. It means up to 85% of it gets added to your taxable income, taxed at your normal rate. The exact number depends entirely on your personal numbers. If you want to see exactly where you land, I built a free calculator for this, no email required. Head to retirementreadychecker.com, plug in your numbers, and it'll show you your combined income and which bracket you fall into in about 30 seconds. Links in the description. Now here's something new for 2025 through 2028. Congress passed a temporary extra deduction for seniors, $6,000 per person if you're 65 or older, or $12,000 for a married couple where both spouses qualify. Important: this does not change those thresholds I just gave you. It works differently. It lowers your taxable income after your taxable Social Security amount is already calculated. In practice, that means a lot of retirees who would have owed some tax on their benefits may end up owing little or nothing, at least through 2028, when this deduction is scheduled to expire. One catch: it phases out if your income goes above $75,000 single or $150,000 married. So it helps lower and middle-income retirees the most. Federal tax is only half the picture. Some states tax Social Security too, but it's fewer than you'd think. As of 2026, most states don't touch your Social Security at all. Only a small handful still do: states like Colorado, Connecticut, Minnesota, Montana, New Mexico, Rhode Island, Utah, and Vermont, and even most of those offer exemptions if your income is lower. West Virginia actually just finished phasing theirs out completely this year. So if you're planning a retirement move, this is genuinely worth checking before you pick a state. A few strategies that can lower your combined income, and therefore your tax. 1. Roth conversions before you claim. Money already in a Roth doesn't count toward combined income when you withdraw it later. 2. Qualified charitable distributions. If you're 70 and a half or older, sending money directly from an IRA to charity satisfies your required withdrawal without adding to your taxable income. 3. Spreading out withdrawals. Pulling a huge lump sum from a 401k in 1 year can spike you into the 85% bracket for that year alone. Spreading it across years can keep you lower. None of these are one-size-fits-all, they depend on your full financial picture. The bottom line, Social Security being taxed isn't rare, and it isn't random, it comes down to that one combined income number. If you want to actually see your number instead of guessing, go run it for free at retirementreadychecker.com, it takes less time than the rest of this video did. If this helped, subscribe. I'm covering divorce, 401k, and Social Security topics like this every week. See you in the next one.